This is, again, I give you this slide just to show you that my website is available to you at businessfinancegroup.org, and again, it's just the same standard types of documentation you would provide with any business loan application. And again, that 15-day cycle. So what can actually be financed with our 504 program? We are real estate. I mentioned real estate. So you can buy existing buildings, you can make additions to those buildings, you can renovate an existing building. If you can find land, which is hard to come by here in DC, but you can find land and build a new building, or you can buy land with a building, demolish that building, and build a new building to replace it if you can get that through the permit process with DC. In terms of machinery and equipment, we can roll that into the financing, so you can actually look at buying office furniture, fixtures, desks, chairs, and roll that in with a real estate project, so we're okay with that. And then the one thing that really differentiates us from conventional bank financing is the ability to finance soft costs. And these are the things, if you're not familiar with commercial finance, these are the things you're going to pay for as a part of any commercial real estate loan settlement. Because we're able to roll them into the project, when you pay that, when you write the check to pay these things, it counts towards your 10% down. So in that case, we're talking about title searches, title insurance, deed stamps, recording taxes, a survey, appraisal, and environmental reports. They come along with any commercial property, and in conventional bank, you would be paying those 100% out of pocket, and they would not be counting towards your down payment on a respective loan on that property. So with our program, that can save you an awful lot of money. I have an example of that at the end of the slide presentation. I would just highlight for you recording taxes. Recording taxes here in DC, as most of you know, are significant. They can be up to 3%, or at least 3% of the project cost. So again, by being able to include them in a financing package, you get credit for that towards your down payment. We do have some requirements with the program. We are only available for owner-occupied real estate, so your business or businesses that you own and control must occupy 51% of the space in a building. The remaining 49% can be leased out to unrelated businesses, or it can be residential use. We have a lot of mixed-use properties that we finance in DC where there's ground floor retail, residential above. That's okay, provided that you're going to occupy 51% of the space. For new construction, the guidelines are a little more stringent. Not really applicable here for DC because it's so hard to find land and build a building. Down payment requirements, we are at 10% down for well-established businesses. We do have a caveat that if you are a startup business with less than 2 years in operation, we do have to require you to put an extra 5% down. And we do have special use provisions. If your business property is special use, for example, a hotel, gas station, car wash, those kinds of things, we do have to have you put an extra 5% down for that. Most retail operations, though, would qualify for not special use. So you'd be looking at the 10% down if you have a 2-year track record, or 15% if you have less than the 2-year track record. If you did happen to be a startup and special use, we do require you to put 20% down. The likelihood of getting conventional bank financing as a startup special use property is slim, so our program can still add value in that process. We do have a minimum project size of about $200,000. That's because my minimum bond amount that I can sell with Merrill Lynch is $50,000. So if you do the math, 40% of a $200,000 project is going to be about my minimum bond amount. There is no maximum in our loan program. There are statutory caps as to how much I can take. So I am normally $1.5 million. If you have a public policy impact to your project, for example, the things you think about with government financing, if you're a woman-owned business, a minority-owned business, a veteran-owned business, or you're in an enterprise zone, Main Street, Great Street, business improvement district, you can qualify for public policy, and that gets you up to a $2 million limit on my piece. And then if you are a manufacturer, but you guys are not, you can go to $4 million. I like to tell folks that the manufacturing lobby in Congress was particularly effective that session. And then we are able to accommodate larger projects because when I cap out, the bank just takes the difference. So the largest project I have done is a $16 million project where we took $2 million, the borrower still put in 1.6, the 10% down, and the bank funded the difference. To be eligible for our loan program, you do have to be a for-profit entity. Unfortunately, no SBA loan programs are available to nonprofits. You have to be small by definition, but that's a very liberal definition. It's $7.5 million in net worth for business purposes, the business net worth, and $2.5 million in after-tax income. And then you have to create jobs, retain jobs, do something good with the local community that we can document and measure, or meet one of these public policy objectives of SBA. I'm trying to give you guys just a snippet of kind of the program guidelines. I do conduct, for those of you that are interested, a regular monthly training seminar. Lasts about an hour at the Martin Luther King Library through the EBIC Center. So that is available on their calendar and their website. You can see we can come in and do the full-blown presentation, have a lot more time for questions and answers. Where does the equity come from? This is always a real challenge with businesses, is you got so many other competing needs for cash. How can you come up with a 10% down? Unfortunately, it does have to be cash. You can borrow that money though, so if you want to use the equity in your home, you can go and get a home equity loan or home equity line. We can treat gifts from relatives as part of an equity injection by you. And if you can negotiate with a seller and actually get the seller to take back a note, which is possible, it's not as likely as it used to be, that we can actually count that as well under certain circumstances. Or if you already own property, for those of you that may already own property, we can let that be your equity injection into this program, so we'd be able to do 100% financing for you of your new costs. In terms of what we look for when we're evaluating a loan for an existing business, good cash flow and a good management team. And then for startup businesses, we're going to look at business plans. And you've heard a lot of information about the EBIC Center and the Office of the Deputy Mayor for Economic Development and the resources through that group in terms of helping out with business planning and projection modeling. And I can't not emphasize the assistance through the EBIC Center, which is available at Martin Luther King Library. And most of those services are free. So. And again, for startups, we want to make sure, as it was mentioned by one of the panelists, make sure you have equity, you have some working capital, because startup businesses always take longer to develop, and you want to make sure that you've got the cash and the resources available to you to continue funding the business until you reach an adequate profitability. So just to recap about the program, we do 90% financing, which is different than conventional bank financing, which only offers up to 80% typically. We can include hard costs and soft costs, hard costs being things that you're buying, real estate and equipment, soft costs being those things that don't add value but you're going to pay them regardless. And then with our low loan to value, the bank at 50% of the project and a first mortgage, you're going to get better terms and conditions from a bank than if you go into a bank on a conventional loan when they're partnering with our program. And again, our interest rate at 6.1% is below market right now, and that is fixed for 20 years. And hopefully with our company, the process will be quick and easy. I wanted to give you a sample project just so you can see how this whole thing works. Just for example, if you were buying a building, an existing building for $500,000, you identify, let's use an example because we're doing a project now on 8th Street Northeast. You identify a building for $500,000, you're going to need to do a substantial renovation to that property. So let's say that your renovation estimates are $425,000, and then as a retailer you need to put in, display cases, furniture, and fixtures. That's going to cost you about $50,000. Then let's look at the soft costs, the things that you're going to have in any real estate transaction. Recording taxes at 3% of the project, that's $15,000. You've got title charges for the title, search on the history of the ownership of the property and the title insurance. And then you've got an appraisal and an environmental report, structural environmental inspection. So that gets you to about the $1 million level. With our program, again, if you're an existing business with a 2-year track record, you're looking at 50% for the bank, 40% for me, and then you're putting in $100,000. I contrast this with conventional bank financing. If you look at a conventional bank financing, you're going to be putting down 20% of the hard costs. So if you look at the cost of the real estate and the renovations and the equipment, 20% of that is $195,000, and then you're going to be paying the soft costs completely out of pocket. So that's another $25,000. So by using our program, your total out-of-pocket costs with owning the building and configuring it to your use is $100,000. With conventional bank financing, you'd be looking at $220,000. And you're going to get us our portion of the financing at a below-market interest rate at 6.1%, when the commercial bank financing is about 7.5% right now. So again, this is just a sample, just to kind of get you, if you're interested in buying property, you can get a sense of how you can save a considerable amount of money and lock into very low interest rates for 20 years. We are at the historic